Hi, this is Zak Mir from Zak's Traders Cafe with a look at some bulletin board hero stocks on Friday, the 19th of February. Starting off with Aquarius Platinum, where actually I have to say that I was amazed but when I saw this chart because I haven't seen it for quite a while. Rising trend channel, rising formation here from November 2014. Decent support along this line from June last year and the 50-day moving average at 11.83 pence. And while we're above that, and especially while we're above the 12 pence level, looking for a target up to 20 pence over the next 1 to 2 months in what should be a relatively straightforward progression. Our trend line also in the RSI window, which we bounced off, which also provides decent momentum to the upside. And he dips towards the 12 pence zone, currently regarded as a buying opportunity. Next up is Amio Minerals, and here it's been a long wait for a decent reversal, but it looks as though it may be coming up here after that decline from 40 pence plus. The reason for saying this is the bear trap from below, bear trap rebound rather from below the old 5.5 pence December floor. While we're above that, we're looking for an initial target at the 50-day moving average at 6.9 pence, and then after that up to as high as 10 pence, which is an October resistance line projection. If you're cautious, you'd probably wait for either the clearance of the 50-day line or at least this 6.44 peak, which was the initial February high. But the bounce off the RSI support line from November is a leading indicator on recovery, as is obviously the bear trap rebound. Next up is independent resources, where one treads with caution, let's say. Obviously, the meltdown in January, the gap to the downside. Most people probably would sort of walk away or stay away from this after that, but at least from a technical perspective, looks as though there's a bit of interest here around the 10-day moving average, 0.1 pence. We've got an uptrend line here in the RSI window as well, which provides at least a modicum of upward momentum. That could give us a target at 0.2 pence while we hold above, let's say, 0.09 on an end-of-day close basis. Best case scenario here is that we clear 0.2 pence over the next week and then attempt to fill the gap down to or up to 0.45 pence over the following month or two. But obviously this is a very, very sad looking chart still, and one would not want to get too excited at this stage. Definitely you want to see strength coming in there before pressing any buy button. On to Jubilee Platinum next, which has been a long-standing bullish prospect, but so far hasn't quite been able to get itself going. Probably the best thing here, in order not to have dead money in the market for an extended period, is to wait for an end-of-day close above, or a weekly close above 3.5 pence, which is the top of this continuation triangle from May last year. That said, we have a little bit of an RSI breakout here, so it could be that the shares are just winding themselves up for a fresh leg to the upside. Aggressive traders would be going long now with their stop loss just below the 50-day moving average at 3.22 pence. The price a return to 5 pence over the 1 to 2 months after a break of 3.5 pence. Metal Tiger is next, and here it's also been quite a frustrating waiting game. Looks as though there's some decent interest here above the 200-day moving average, 0.9 pence at the moment, and the near-term moving average is starting to rise as well, which is helpful. The overall pattern here above 0.8 pence, the shares could head as high as 1.4 pence. If you're cautious, or if you trying to avoid having a dead waiting time, you wait for a weekly close above a penny before going long, which isn't too far away, obviously, from where we are at the moment. RSI support line there from the end of last month is also a leading momentum indicator. Finishing off with another difficult situation, Nostraterra Oil and Gas, one of these periodic breaks here through the 50-day moving average, 0.07 pence, and while we're above that, we've got a target here at the top of a rising August trend channel as high as 0.14 pence. Obviously, the shares have disappointed on many occasions before, so you want to see at least a clearance of 0.09 pence on a weekly close basis this week or next week if you are a cautious or a frustrated trader. That's it from me. More updates on Monday.